Hi everyone, let's focus on some new insights on the medium time frame and the low time frame counts in this video, starting with the alternative scenario on the medium time frame, where this is a 1, 2, 3, 4, 5. The reason that for me this is an alternative scenario is because we have been ranging for so long in this potential wave 4 compared to this wave 2. And also, if this is the beginning of the wave 4, which looks to be an impulsive wave A, we would expect another similar move to the downside in a wave C, creating a zigzag A, B, C. Now, if we would move down from where we are right now, we would end up below the 0.5 FIB over here, taken from the low of 2 to the high of 3. However, the 0.5 is a maximum target for a wave 4, and if we close candles below the 0.5, it also invalidates wave 4. So in order for this wave 4 to be more legit, let's say, we need to move to the upside and then go down to the downside and not end up below the 0.5 FIB. So we need to range even longer, which just makes this scenario look very ugly, let's say. So my preferred scenario is that this is a wave 1 followed by a zigzag in the wave 2, and a zigzag correction in a wave 2 is also the most common correction in a wave 2. Now, important to note is that I do have FIB times on my chart right here, the 0.618 and the 1-to-1, taken from the low of the impulse to the high of wave 1, and this is also a common target time-wise for the end of a wave 2. Now, a second thing that you see on my chart over here is CVD, which I think is important to highlight, and I actually took a screenshot of the CVD chart because this is where we are right now on the 4-hour time frame. This is where we are, and this is the drop that we had to end wave 4. So this is then the end of wave 4, and this is the impulse to the upside. Now, the lines that you see over here are CVD lines, and basically what these represent is market selling or market buying. Now, what you can see over here is the impulse that we had, and you would think that, hey, we are here at the same price levels as we were here a couple of days ago. However, the CVD lines, the blue as well as the yellow one, are a lot lower compared to the price that we had over here. The lines here are a lot higher. How come? Now, the reason that that is the case is that this move up was supported by limit positions. So not like limit orders, so not market orders, not people market buying, but it was actually limit orders pushing the price to the upside, which actually is a bullish sign as well. Now, if in our scenario, as just mentioned, this is a wave A, B, and then a wave C for a little bit more downside as well in this preferred scenario, we can imagine that these lines are going to drop a little bit more, people are going to sell, which then also creates bullish divergences on the CVD, as then we have a low over here, but we create a higher low. While on the CVD, compared to the low that we made, we're going to create lower lows. So higher low on the chart, lower low on the CVD, which is a bullish divergence and something you can use as extra confidence for maybe entering a potential long setup that I have on my chart right here. Because the most common scenario for a wave 2, or let's say the most common drawdown for a wave 2, the Fibonacci retracements, is between the 0.5 and the 0.786. So a potential entry can be to enter around the target box over here. With the stop loss then, well, we don't know what price is going to do and how we're going to approach this area, but at least the 786, because the 786 is still a target for a wave 2, and then trading it to the upside for an impulsive wave 3. Also, if this is an A followed by a B and eventually a C, the 1-to-1 as it stands now with the highs that we made over here also has very nice confluence, as you can see with the target box that I have between 22.6K and 21.8K. So this looks to be a very interesting setup indeed. Now, if we then go to the lower time frames and I go to the 15-minute over here, you will see a red cross, because this is a scenario I do think is important to mention, even though it is a very unlikely scenario, where this is then a 5-wave move in the A followed by a 3-wave B and then a 5-wave C. Now, first of all, I think it's quite difficult to count 5 waves over here in this move to the downside. It's more like a 3-wave structure. But that aside, we also didn't reach the minimum target for a wave C, which is the 0.618. So therefore, I think that a bullish scenario at the moment where we're going to take these highs as it stands now is actually really difficult to think of. It's way more likely and very much higher probability that we create downside instead of upside to take these highs. So the highest probability is taking this low instead of this high, because if this is a 1-2 followed by another 1-2 and then 3 to the upside, If we look at the volume is terribly low as well, actually lower than the wick we made, but the volume is really, really low during this move to the upside, and we didn't hit the minimum wave C target in a potential ABC, that is. So yeah, therefore the red X. So if we then go to my preferred scenario, those are the trades for the preferred scenario that I'll show you in a second. But my preferred scenario, and it looks a little bit messy, but let me explain. So we have a 5 wave down over here in A, 1, 2, 3, 4, 5 in the blue A, and then we're looking for the blue B. Now, a minimum target for the blue B is the 0.382 Fibonacci, which actually is somewhere over here, but we hit the 0.5, so I basically hit the, I've hidden the 0.382. So over here, you see the target area for a potential wave B. So if this is an A, and this is then B, and then eventually we expect another C to the downside, wave B should end somewhere in this area, and then the 382 is here. So somewhere between the 382 and the 0.886, which it has done. It has hit the 0.5 perfectly fine. Now, if we then look at the count inside of this bigger ABC, we then have a wide W, a wide X, and then a wide Y. So we have a WXY, W over here, a zigzag, the X an expanded flat, and then the question is, what is this Y? Because actually the Y is taking quite a long time, it's just grinding slowly to the upside. The most common target for wave Y is this white box over here, between the 1 and the 1.236 trend-based fib extension, taken from the low to the high of W to then the low of X over there. And a more rare target is this yellow box up here, which is basically between 25k and 25.3k and 25.7k. So we already hit the minimum target at least for wave Y. So one could then think, okay, trading wise, you could already start, and actually these scenarios are not yet relevant, but trading wise, one could already start to build a potential short position as we already hit the minimum target for wave Y. However, when I then look at what is wave Y, so then we go one layer deeper, 1 degree down, what is the count inside this wave Y, right? So in this scenario, I am currently thinking either the high of wave Y is in, right? This is the high and we expect an impulsive move to the downside. However, at the moment, this does not look impulsive to me. It's not going down rapidly. It also doesn't look like a 1, 2, and then 3, 4, 5 to the downside, as this first part over here looks more like a 3-wave structure. So currently, my idea on the very low time frame here is that this is a 3-wave in the in the W, sorry, followed by a 3-wave X. Eventually a 3-wave in the Y, and what is important is that Y hit the 1-to-1, so in a WXY, the Y hit the 1-to-1, which is the absolute most common target in a WXYXZ scenario, so this is important over here. Then we then have some sort of maybe a 3-wave X or wave X already finished here, but I would like it more if this is going to be the low of X. We don't necessarily have to take these lows, but at least wave X ending over here, so creating a little bit more time in this X, and then going up another time for a wave Z. Important as well is that wave Z, the most common target is between the 1 and the 1.236, which is between the 25.5k and 25.7k, which then a more rare target being the 0.618 and the 1.618, which is between 25.2k and 26k. Now, if we then look at the confluence between the fibs, we can see that over here we have a golden pocket, we have a rare area for wave Y, and we have then also the common area for wave Z. So this area basically between 25.5k and 25.7k is very, very interesting for potential trading setups, and that is why I show these on my chart right now. So a potential trading setup can then be to enter a potential short position over here, stop loss somewhere above. This is above the rare target for a wave Z, so somewhere here, then trading it to the downside for a wave Z. However, the invalidation is taking the low of this X over here, so if we would move to the downside, it's very likely we're going to be in this impulsive structure to the downside. Now, that's my opinion, I don't like breakout trades at all, but a potential scenario trading setup based on this count would then be to enter if we break. So if we go up and we take these highs over here, this potential trading setup is invalidated, okay? But if we would move down without taking these highs, then the moment we break these lows, one could think, okay, it's very likely, high probability, we start to move down for wave C, impulsive. So one could enter over here, stop loss above these highs, as that is the invalidation, and then eventually trade it to the downside. However, the risk to reward in this scenario is not really great, as if we open the target boxes over here, the target over here for wave C is then the 1-to-1, which is the target box as well. And you can see this is basically a maybe a 1-to-2 risk to reward with the stop loss above the high, while this one over here is a 1-to-4, so that's way more attractive. So yeah, this is what I wanted to say. I hope this video was helpful or valuable to you. Thank you for watching and subscribing, and I see you at my next video. Bye bye.